Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Stephen Innes. He's the Chief Global Market Strategist at Axi. Hi, Steve. Great to have you on the show.
Thanks for having me, Brian.
Now, before we get your insights, Steve, let's take a quick look at how markets in the region are performing. And it looks like a very mixed bag. The Nikkei is up 1.14% at 28,485.86. Shanghai Composite is down marginally by 0.08% at 3,605.33. The Hang Seng is also down marginally 0.03% at 28,268.80. The ASX 200 is up 0.11% at 6,686.40. The Kospi is up 1% at 3,157.34. And closer to home, we've got Bursa Malaysia. The SGX is trading at 2,990.95. It's up 0.46%, and Bursa Malaysia is up 1.05% at 1,628.9. So, Steve, what do you make of how markets performed this morning?
Markets are a little bit bubblish. We've entered the new year on a high, and markets continue to hold on to those gains. Obviously, the two-pronged benefit from glorious amounts of stimulus, both monetary and fiscal, continue to pave the way here. And obviously, when the vaccines start to roll out, the mobility data will continue to track higher. And this is, suggesting that we still have room to go on this reflation trade. It appears to me that the path is clear, except the Federal Reserve Board also is taking note of reflation picking up. And there was some thought here in raising in capital markets that the Fed may be entering to remove accommodation a little bit quicker than the market had actually anticipated. So this is the current debate that's going on behind the circuit, or under the surface right now, whether the Feds are going to bring forth tapering or they're going to leave it in place. Really, it comes down to what the economy does. I mean, the Feds are pretty clear cut on this. They're going to keep interest rates as low as far as the eye can see until the economy recovers. When will the economy completely recover, and when will employment levels return to some semblance of normal? Your guess is as good as mine. So I think the Feds remain on hold indefinitely until we see that happen.
And also, I think that one of the key challenges, Steve, is the fact that these vaccine rollouts, governments are now realizing it's going to take a far longer period than they originally anticipated. And that's going to impact our recovery, wouldn't it?
Yeah, I mean, that's the problem. There's logistics on the distribution, whether it comes from temperature logistics or just having the wherewithal and the capacity to disseminate them through the economies. But U.S. has got an advantage here. They've got huge networks of transportation networks, linkages, and this is really an advantage when it comes to the U.S. because it's 250 million people in a relatively smaller area, but it's well serviced through airline transportation, train hubs, and lots of other roadways that these vehicles can be transported. My view here is that the Biden presidency's first day of business is going to be ensure that these vaccines are rolled out. And I do believe, it's all conjecture here, but my feeling is that the U.S. will reach herd immunity quicker than Europe. And I think this is part and parcel to why the dollar is picking up a little bit of strength these days.
Okay, now moving closer to home, what's your view on Malaysia now that a state of emergency has been declared? Now, does it take risk off the political instability element that's been hanging over investors' minds about Malaysia?
Yeah, that political risk is always going to be there, dated back to the last election. And that's just going to be a constant. But I think to a large degree, it's a relatively stable, Malaysia's a stable country. So I don't think, regardless of what party gets in power, there's going to be a dramatic shift in its overall political climate. And I think investors are warming up to the idea with the reflation trade is the dominant trade right now and the dominant factor. We saw the knee-jerk sell-off on the ringgit yesterday as a result of the MCOs getting reimposed. But the ringgit came back to life today on higher oil prices. In general, feeling around the markets that this reflation trade is going to extend quite a bit longer, maybe right through the end of 2021.
Now, speaking of oil prices, energy stocks, which have been pretty much laggards towards 2020, jumped yesterday. when crude oil prices went above the $53 mark. I mean, that's a 10-month high. What is your view on oil markets in the near term?
I think there's still room to climb. Of course, nothing goes up in a straight line. And I think the next element of pushback here comes from shale producers, given the fact they're getting above those break-even prices where it's actually profitable for shale to produce. However, there are some financial constraints affecting shale oil markets right now, just a lack of money moving in to the industry for the producers to actually put new wells in place, notwithstanding the fact that the Biden energy proposition is a little bit less welcoming to oil production on U.S. land. So there's a couple of factors here that are offsetting factors, but ultimately I think topside prices for oil are quite limited because we are in the midst of an intervened market. Prices go higher, I think OPEC is going to obviously want to pump more oil back to the market. So it's a balancing act here. Prices go up, OPEC introduces more oil to the market. I think 60 sounds like a nice target, but I wouldn't be surprised if we had an overshoot on oil prices towards 63 to 65 before finding a happy medium somewhere around the 60 level on Brent contract.
Now, I want to ask you a little bit more about that and just confirm this. The issue with liquidity for shale producers, that's two-pronged, isn't it? One is because investors have looked at it as, because of the amount of bankruptcies that were there, as a risky proposition. The second thing also is a lot of funds are very ESG focused now, and that doesn't fit into the portfolio. Is my read correct on that?
100%. Yeah, the bankruptcies are scaring people off, and that's part and parcel because the uncertain outlook on the energy sector. But this is getting magnified through the lens also of a Democrat government, where the next big push is going to be on renewables and renewable energy and ESGs. And this is why there's a big influx into that sector, because there's going to be more government money thrown into that sector this year. So there's a sense of front running the ESG markets right now. Look, I think the glory days for ESG are still to happen. I think there's lots of price evolution going to happen in green energy. I think that's the wave of the world. And I think we would be silly not to recognize that the world's going to turn green. And that's just the way things are.
Now, Steve, looking ahead this week, what are the key numbers and reports that we're looking out for in the coming week?
Well, we've got the CPI report coming out of the U.S. tonight. That's going to give us a read on inflation. Market's expecting a fairly tepid output. But hey, if the inflation big uglies surprisingly start to rear their ugly heads, it'll turn focus back onto the tapering talk. But ultimately, I think the big risk of the week is going to envelope around Chair Powell, who's speaking on Thursday. And by all expectations and by all my thoughts here is he's going to push back against all this tapering talk and suggest that the Federal Reserve Board is going to keep interest rates low. I think the combination of Biden and Yellen is a quite dovish combination. I think he's going to reinforce that mantra back to the markets. And I think there's room for the dollar to weaken considerably after Powell's comments. And this should help risk sentiment globally, push commodities higher, soothe the Asia risk despite the lockdowns, and things should return to a semblance of normalcy. But we still have this big obstacle of the inauguration to pass where there could be chaos on the streets. So, we still have to take everything with a grain of salt as far as risk on sentiment goes until we ultimately pass the chaos in the U.S. markets, and hopefully we can get back to trading and normalizing our roles in the markets as we all really want to do this new year.
Once again, Steve, as always, thank you very much for your insights. We've been speaking to Stephen Innes, Chief Global Market Strategist at Axi, on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.